have a better grasp of where we are, what the reforms mean, and what steps individuals and organizations can take next. Once again, you're very, very welcome. So I'll proceed briefly to reading the citation of our speaker, Mr. Taiwo Oyedele. Thank you. Mr. Taiwo Oyedele is the chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, set up by President Bola Ahmed Tinubu with a broad mandate to carry out critical reforms bordering on fiscal governance, revenue, transformation, and economic growth facilitation. Prior to his current role, Mr. Oyedele was the fiscal policy partner and Africa tax leader at PwC, where he worked for 22 years, including over 10 years in top leadership positions, gaining in-depth knowledge and diverse experience ranging from tax advisory and policy advocacy to business strategy consulting, leadership development, and policy design and execution. Mr. Oyedele is an accountant and an economist by training. He's an author, keynote speaker, mentor, and commentator on finance, business, and economic matters. He was a thematic leader for the Fiscal Policy and Planning Commission and chairman of the West Africa Debt Management Roundtable of the Nigerian Economic Summit Group, NESG, chairman of the Taxation and Fiscal Policy Faculty Board of the Institute of Chartered Accountants of Nigeria, ICANN, member of the Nigerian Taxation Standards Board of CITN, and a member of the Ministerial Committee on the design and implementation of Nigeria's national tax policy. Mr. Oyedele is a fellow of the Nigeria Leadership Initiative, member of the Global Tax Forum, and a former member of the Global Governing Council of the Association of Chartered Certified Accountants, ACCA. He is an associate professor at the Babcock University and a guest lecturer at the Lagos Business School. He is an alumnus of the London School of Economics and Political Science, Yale University, and Harvard Kennedy School Executive Education. He is the founder and president of Impact Africa Foundation. Ladies and gentlemen, please welcome with me Mr. Taiwo Oyedele. Thank you. Let's react in the chat box. Yes, thank you very much. So at this time, we'll invite the Director General of NECA, Mr. Adewale Smart Oyemide, to give the opening remarks and also give background to today's discussion. DG sir, over to you. Thank you.
Thank you very much for the opening and the welcome. I want to join all of us in welcoming and appreciating Mr. Taiwo Oyedele for the work that the committee has done. You know, I can say without doubt, in the history of engagement in this country, in the history of stakeholder engagement, I'm not sure there's been any presidential committee or state committee, not even the Constitution Review Committee at any time has done the kind of engagement that the Presidential Committee on Fiscal and Tax Reform have done in engaging stakeholders from to bottom, horizontally, engaging all because all of us must align with these new tax reforms. And they've also taken the engagement further with the creation of the content, the forming of the content creator scheme, and then the volunteer scheme. Many innovative schemes that have taken this conversation away from the elite kind of conversation we used to have and taking it actually to the grassroots. And for that, I really want to commend the chairman for the commitment that he has put into this, notwithstanding the threats, notwithstanding the challenges that comes with it. For us as NECA, our options are also limited. We know that the critical element in the success of the tax reforms is the private sector. And since the private sector was part of the conversation at the beginning, the OPS as a representative in the Presidential Committee, we also felt that we must give not only Mr. Taiwo, but also the whole committee the absolute support they need so that they can help us to navigate this very interesting path of the tax reforms. So we want to commend you, sir, for everything you've done. We want to commend your commitment. We want to commend your resilience in the face of the many challenges. And we hope that all Nigerians will have the same kind of resilience and commitment to a cause, the way that you have shown and your to others that are not on this call yet, as we call the topic, the night before the implementation. In the context of all the engagement that we've had, what else do we need to understand? What else do we need to hear? And what else do we need to take cognizance of in the context of the tax reforms that will become operational from 2020 and 2026? May I just leave this on the plate of the chairman, that one of the things we'll request, so that I don't forget, would be if the committee or the implementation team, because we're also open and we'll continue to advocate that the president should leave the committee to actively midwife the implementation of the tax reforms, not leaving the new FRS to go through the trenches alone. But we need, I think the country needs the country needs the committee to midwife the implementation of the tax reforms. But one of the things we will be requesting from you, sir, is for us to also have a private sector or a NECA presidential committee desk for the private sector. So should in case there are challenges, there are issues that needs further clarification, immediately we start the implementation, that members can quickly reach us so that we can have a desk, a clearing desk that can collate all the issues that will come up or that are coming up in the context of implementation. And then we have a focused desk in the presidential committee table or in the new FRS, where we can channel those issues. That will also help the committee not to be overwhelmed with issues coming from left, right, and center, but a focal desk that NECA can manage for the Ghana private sector, so that those issues can be sieved. And then we pass it to the committee or pass it to the person in charge, so that we can get a focused and a process that won't be distracted. Will help the private sector to align absolutely within the context of this law. So once again, I want to appreciate member companies and non-member companies. We have 307, 308, 309 is already building in on this call. We have over registered. Hoping that we'll have more people joining us. Please, I want to beg all of us, if you are joining, please reach out to others that are not on this call now, so that they can join and enjoy, they can benefit from the very critical conversation that we are going to have this morning. It is the night before the implementation of the tax reforms. Thank you very much. Tomi, I hand over back to you.
All right, thank you. Thank you so much, TJ, for setting the tone for this conversation. At this time, we'll now move to the central presentation of today's session, the reason why we've all gathered here today. It is my pleasure to invite Mr. Taiwo Oyedele, Chairman of the Presidential Committee on Fiscal Policy and Tax Reforms, to take us through this session. Mr. Oyedele, the floor is yours. You're welcome, sir.
Thank you, Tomi Loba, and thank you to the DG and my brother for the warm welcome and kind words. I've noted your requests. We will definitely continue with implementation for as long as necessary. We also recognize the need for the institutions to take the baton and run with it, because you can't have a committee permanently. But the point is valid. While we are doing this transition, we need to manage it together for the very best outcomes. And in terms of a desk at the presidential committee, I'll just say approved. Anything that makes it easier for us to have that engagement and feedback, because this whole reform is really about the private sector, is about organizations such as NECA and your members. So for us, success will be measured by how you and your members are able to benefit from the reforms. So we are happy to grant that. So we can discuss the details of contacts and how we communicate after this meeting.
Thank you very much, sir.
So again, I also want to thank the DG and NECA for this thoughtfulness. He's right, we've done a lot of engagement, but I also have to admit that NECA has been very proactive in making sure that we have those engagements, because the reality is we have so many stakeholders we need to be talking to. And if some are just totally quiet, despite the willingness to talk to them, we may never have the opportunity to engage, but NECA has been proactive for us to have these various platforms to discuss. And very good morning to everyone who has joined. If you're joining from a different time zone, good afternoon and good evening. So what I want to do, and I like this topic that NECA has selected, which is the evening before the tax reform implementation, what else do we need to know? And even beyond knowing, what else should we be doing? So I'll try and spend some time going through the presentation that I have, so we can have enough time left for questions to address areas of concerns to participants on this call. So the outline of my presentation is to give an overview of the reform and the key changes, and then highlight what else participants need to know, and then discuss impact and readiness assessment that we all need to take into account. What should you be doing? And then conclude with the next steps. So the first question to ask is, why the reform? And I'm sure by now everybody should already have an idea of why they believe the reform became necessary. But we also not ruling out people who think that it wasn't even necessary as we speak today, to say, why don't you just leave us the way we are? But the reality is, if you are speaking to data, you will have no doubt in your mind that these reforms are indeed necessary. They should have been done like 20 years ago, and the next best time is now. So it's to address complexity in the tax system. When the World Bank was still doing annual ease of paying taxes reports covering about 180 countries around the world, I had the opportunity at the time to participate and contribute for Nigeria. Nigeria was ranking very low. So it's a country where, tax revenue is very low. It's also a country where it's one of the most difficult places on earth to even pay taxes, even when you want to pay. And under the platform of the Nigeria Economic Summit Group, funded by Gates Foundation, we did a national study a few years back. And, it was about tax perception. And the result was very telling. It was that the Nigerian people don't trust governments, and therefore they rather not pay their taxes. And one of the reasons, when they want to pay the tax, the process is complex and sometimes corrupt. So you can't hope to have a nation where there is development, where things work, and then the tax system is not working. Like it's a contradiction, because beyond the revenue you generate from taxes, tax is how you concretize the social contract. We all have our concerns about how government is spending our revenues, whether it's from taxes, whether it's from natural resources. But part of the failure of the system is that many of us that should be asking questions are either not asking questions, or we're not asking the right questions. And the reason why many of us don't ask the right question is because we don't have the right understanding. So what you would have seen with this tax reform is loads and loads of misinformation everywhere. People tend to, for some strange reasons, They just go with people who have no experience, no qualification. There's a reason why finance, tax are specialist area, and people spend time to go to university. They spend time to do professional exams. They spend decades trying to practice. And then you have a tax reform that is, transforming the whole system. And then, a content creator that maybe has never even filed their personal returns before, we just tell people this is what will happen to you, this is the tax you pay, and then people just run with it. And it's creating a lot of problems for the system because people that the reforms are trying to help are now fighting the reform, which is really very, in a way, unfortunate. So we have multiple taxes. The tax system is not conducive for growth. It's a drag. When you're trying to do business, whether you're small or big, it's almost like, a knee on the neck. You want to grow. Why is the system not allowing you to grow? So you have this fiscal impediment. And there is excessive tax burden on businesses. Nigerian businesses pay some of the highest tax burden in the world. We rank in the top 10 when you sum all of it together that businesses have to pay on their profits. So the profit that they should be using to expand their businesses and grow, hire more people, is being sometimes taken away in form of taxes and levies and charges and fees, many of which do not get properly into government treasury and therefore do not result in fiscal exchange for the people. So we have been taxing poverty for a long time. When VAT, many of us will remember VAT, the tax amnesty that was introduced around 2017. When the program was being launched, the VP at the time was acting as the president. And the data that was provided nationwide was that 96% of income tax revenue was being contributed by low-income earners. So just think about that for a moment. So you have a country where it's the poorest people that are paying the taxes and the rich people are paying next to nothing. And then we are surprised that there's inequality, there's social discontent, and then people are able to be recruited easily for crimes. It's the system we have created. And if you don't fix that problem, you can do anything else and it still will not work. So in every decent society, you make the tax system progressive, first by exempting low-income earners because they have no capacity to pay. In an ideal situation, government should be crediting their accounts every month to supplement the little income they have so they can meet their basic needs. We have it upside down in Nigeria. So this reform is also trying to fix that. So we can also stop taxing capital and stop taxing investments using archaic laws with ambiguous provisions. So what are the reform's priorities? Achieve fairness, ease of doing business, economic stability, and growth. So just for emphasis, revenue generation is not a primary objective of this reform. To start with, revenue generation when you're doing a tax reform is to place the cart before the horse because taxes are the consequences of economic activities. So you can't generate income tax from me if I have no job. You can't collect VAT from me if I can't buy goods that are vatable, and so on and so forth. So for a sensible reform, you need to start with the economic activities themselves. How do you stimulate economic activities and growth? And then tax revenue will come naturally. The progress we have made so far is that this reform, along with other reforms of the government, have helped Nigeria to stop the economic decline. Nigeria was declining economically very rapidly in 2022, 2023. So the reforms, some of them painful, have led to a stop to the decline, followed by macroeconomic stability. And now we're beginning to see some growth and we're seeing more investor confidence. So the phase we are hoping to get to very quickly is when you translate all of these macroeconomic stability into micro outcome for individuals and households. In between the macroeconomic stability at the national level and the micro outcomes for household is the stability of firms and their growth. So companies, when they are growing, when they can produce more and sell more and make more money, they'll pay their staff more, and then they'll hire new staff, and then they'll grow. So these things have a way of adding up and impacting positively the whole economy. But we have to admit that this is work in progress. So the work is not done yet. So we have to sustain the reforms. So sometimes when I see people, because there's one provision in the reform they don't like, and they're calling for it's a bad reform, it has not been this and that. Some people are even saying suspend implementation. I say, well, if only they know that what they're trying to do is economic sabotage, maybe they will stop. So this reform is work in progress. And we need to accelerate those micro outcomes so that the ordinary person can be able to buy food, they can be able to pay the school fees of their kids, they can be able to afford medical care, they can be able to meet their basic need, paying rent, transportation, and the rest of it. Always you have the political economic dynamics. In Nigeria, it's worse because a lot of people play politics with everything, including if you don't want this current government to succeed, you actually don't care if you drag down the whole society alongside. So because you just don't agree with the president, you want the economy and the country to fail. Like it's not even adding up. It's almost like taking poison and then hopes that it magically kills your enemy. So we have those issues. You see the building blocks to the right of this screen. It's talking about the important considerations for this reform, from building trust, ensuring equity, and so on and so forth. And at the top of it is the social contract where the system needs to work for all of us, whether you're small, whether you're big, whether you're a household, whether you're a large business or not. So what are the key changes we have introduced in this new tax reform? First and foremost is the message under the heading on this slide. It's a quote I like so much because it's so apt. And the quote is that you are not entitled to your opinion. You are entitled to your informed opinion. And that's because no one is entitled to be ignorant. Harlan Ellison. So I find that this quote is so important and relevant for the tax reforms. You can't just wake up and say, if they send money into your account, CBN will debit it. You can't just say people in diaspora will pay 20%. You can't just say that anybody that earns X amount will be taxed. You can't just say that from next year, so they will do X, Y, Z. You can't just cook up something because it's your opinion. It has to be informed. Which section of the law, on what basis, what knowledge do you have, and what's your experience? So first is fiscal equity, which is that we want the system to be progressive by protecting low-income earners, allowing small businesses to breathe. And there's this narrative of the informal sector is where we can collect money. That's not exactly correct. The bulk of the informal sector are just hustling. They're just trying to survive. So trying to impose taxes on them is trying to tax your most vulnerable population. I do admit there's a small percentage of the informal sector where some even make more money than CEO of banks, right? So it's to be able to use data to find that top 2%, top 3% in the informal sector that have the capacity to pay, and then protect everybody else who is too small and not able to pay taxes. Economic growth is important. If you ensure that the tax burden is not too high, there's this Laffer curves theory that says if your tax rate is 0%, you don't collect any tax. And if your tax rate is 100%, you also will not collect any tax, because why should I go and get a job if I have to pay 100% tax? So between 0 and 100 is where your tax rate needs to be. If it's too low, you may not collect the right amount. If it's too high, you also may not collect the right amount, right? So what is that point? And what we've seen around the world is that the tax burden has to be low enough to stimulate investment and businesses and economic activities. So as part of this process, from January next year, low-income earners will not pay PAY anymore, so their disposable income will increase. Middle income earners will pay less taxes, so their disposable income would also increase. For people who are even high income earners, 2 million naira a month and above, they'll see marginal increases. If somebody is earning like 5 million naira a month, the increase is not even that significant. The 25% that people are talking about as the top rate, you only get to that 25%, around 120 million naira a year, 20 million naira a month. So nobody likes to pay taxes, even if you earn 1 billion naira a month, you rather not pay tax. But it's also established around the world, without taxes, the society will not work. So at the end of the day, those of us that will be impacted as high income earners, being asked to pay a little bit more, we need to take it as our contribution to society and a call for us to hold government to account. We cannot be expecting vulnerable people who are struggling to find the next meal to hold government to account. They can't. If you give them 2,000 naira and a loaf of bread, they'll do anything you ask them to do because they are vulnerable. So it is those of us in the middle class and high income earner that should hold government to account. That's how it's done everywhere in the world. The other reason why that top rate for individuals was increased to 25% is because we needed to encourage formalization as part of economic growth. But you cannot encourage formalization if by being in the informal sector, you pay less tax. When you formalize, you pay higher tax. It's a contradiction. All over the world, countries design their system so that people have the incentive to formalize by making sure that when you organize your business properly, you register as a company, you should pay less tax, not more. So Nigeria was doing the opposite. So this is one of the reasons why this reform is bringing down corporate income tax rate from 30% to 25%, and then raising the top rate for individuals from effective of around 19% to 25%. So that way, if you move your business from informal sector and you organize it properly as a company, you are not worse off. In addition to that, small businesses with turnover not exceeding 100 million a year would also be taxed at 0% CIT. This is also another incentive for them to formalize, because now the regime for a formal business is more attractive than an informal business. So this will stimulate economy. It's not even about tax collection. It's about, if you register your business as a company, it compels you to do some minimum corporate governance standard. You have to appoint directors, you need to do minutes of meetings, you need to do accounts, you need to file returns with CAC and with tax authorities. So that discipline helps you to actually run a better business that is sustainable, that can grow and scale, and that can also attract credit as well as foreign and local investors to partner with you. So there's competitiveness. How do we make Nigeria more competitive? Locally, and when I say locally, is you shouldn't be producing something in Nigeria and someone who imported it from China, from Germany and Spain, they pay freight to bring it to Nigeria. They paid everything, including duties, and it's still cheaper than the one that you produce in Nigeria. So we need to be competitive even locally within our economy. Then be competitive within the region of Africa. Now we have the African Continental Free Trade Area. We've always had the ECOWAS, and it's opening up the whole economy of Africa. If we cannot compete, other countries will take that space. Naturally, even though it can't be our entitlement, Nigeria should be the leader of the region. We should lead Africa. You can't do that if you are not competitive. And then be competitive globally. We went for the IMF World Bank meeting in Washington, D.C., and we're trying to encourage some of the American companies to say, hire Nigerians to work for you remotely. Because, we have smart young people, they are good with using internet, they are tech savvy, and they speak good English. At least our English and our accents is better than many of the countries that are attracting more than 20 times what Nigeria is attracting in that space, like the Philippines or Indians, right? And our time zone is much better than many of these countries. So everything is working for us other than our policy and infrastructure. And so as we're saying this and trying to convince those people, they had their concerns, policy issue. We said, okay, we're addressing the policy issue. One of it is tax, where those companies will become liable to tax in Nigeria just by hiring Nigerians to work for them. And it's good that we are speaking, on the platform of NECA. So as employers, you have employees. Those employees need global skills. You don't have to relocate out of Nigeria to get global skills. There are people who are happy to stay in Nigeria and they are living in Nigeria and contribute to their country. So therefore, if we are missing out on global business process outsourcing because of our policies, we need to fix that. The next thing we then need to fix is the infrastructure. So can they rely on your internet if you need to work for them? Will there be electricity to power your laptop or your mobile phone to be able to attend to customers at different time zones and so on and so forth? So as part of this process, we have done quite a number of reforms in the new laws taking effect from January next year, including unilateral tax relief. We want these multinationals to actually come and set up in Nigeria as a headquarter location, shared services center, whatever it is, and launch out to the rest of Africa and the rest of the world from Nigeria. You will not get that if you don't fix the problems that we have with the policy and tax system. So one of it is unilateral tax relief. So you don't need to pay double taxes. So this unilateral tax relief create the impact of Nigeria having double tax avoidance treaty with the rest of the world. So we don't need to have a DTA now for you to enjoy this relief. If you are based in Nigeria and you're operating across Africa and the rest of the world, we have a number of reforms in the new tax law for the digital economy, and the new tax law has now removed the minimum tax on capital. A company will do their business, they will make a loss or make small profits, and the tax law will say, we are sorry, but you still need to pay a minimum tax. Then you have made a loss already. Then where do you pay the tax from? You pay from your capital, you go and borrow. Either way, it's a faster way to kill that business. So that problem has now been removed. There's harmonization of taxes. It's an ongoing process. The new tax law will harmonize many federation taxes, many federally collected taxes, but there's a big problem with subnational, state and local government. You can't harmonize their taxes by enacting a law because most of the taxes they collect are contained in the Constitution. So if you write a law that says they can no longer collect, you just need a 100-level law student to win you in court because it will be that those laws are unconstitutional. So what we have done is we have written to the National Assembly as part of the process to alter the Constitution and address those issues of overlap of taxing rights leading to multiplicity of taxes. So that process, I can announce to you, is progressing well. So those bills have passed second reading, they went to committees, and now there's engagement across subnational that's ongoing. So we're positive that these problems can be solved by us as the Nigerian people, because they were not problems imposed on us by God or by the United Nations or America or anybody else. They were problems we created, and therefore they are problems we must solve, and the time to solve those problems is now. You would also have observed that instead of tax identification number TIN, we are moving to tax ID, which means it doesn't have to be a TIN registered with the taxman directly. It could be your NIN that is the foundation data for your identification. It could be even your phone number. And you shouldn't have a different number with Internal Revenue Service of your state as an enterprise where you pay your personal income tax. You have another number with FRS where you pay VAT. That's confusion. Even me speaking to you as an individual, I have like 3 TIN in Nigeria. I have one that I got from LRS because I'm tax resident in Lagos State. I got one from Joint Tax Board, And then FCTRI said I should also come and collect another one because they see me in Abuja frequently. I said, how can the system identify me as three persons when I'm one? Why can't we register me as one person with one identification and everybody shares that data and that becomes the source of intelligence? It also makes my life easy if I decide to go to my village in Ondo State to buy land. Ondo State will not be asking me to pay another tax for TCC if everything is harmonized and connected. So this harmonization is not limited to just taxes and levies. It also covers who is collecting those taxes. You don't need to have 20, 30 agencies coming to you to collect taxes or even tax audits. You don't need to have different stages of tax audit, desk review, monitoring, audit, special audit, investigation, special investigation, forensic. Who cares about all those different names? What you just need to do is, have I paid my taxes correctly? Just do a review. All those nomenclature that sometimes will lead you to dealing with tax audit for 10 years, moving from one team to another, one office to another office, those things don't help the government. Neither is it that they help the people. So, and they have to be addressed. Modernization, of course, this is self-explanatory. We will be less efficient as a country and as a people if we don't embrace technology. It helps us to do things better, do them faster, and it can also help us to do risk-based audits instead of the taxman just, sending audits letters to the companies that they know that are visible to them, while many others are under the radar. You don't need to do that anymore. The system will tell you who to go and audit. Because if your issues are consistent and they tie together nicely, nobody needs to audit you. But if you sell something to a customer at 1 million and you record it as 100,000 naira because you don't want to pay tax, and the customer that bought for you recorded it as 1 million because they want to get a deduction, the system will flag the two and say the buyer and the seller are reporting different amounts. And then that's an explanation that you need to provide. Maybe you need to attend to an audit. The dispensation we are moving into now under this reform is changing Nigeria from a philosophy that says some Nigerians, individuals, and businesses are dishonest. So let's design a system to just punish everybody because we don't trust them. That's the system we've always had in Nigeria. The new system says, yes, we recognize that some people may not be honest, but there's a very good number of those who are very honest. Let's treat everybody and assume that they are honest and give them the benefit of the doubt. And then design the intelligence to find out when they become dishonest and want to evade taxes so that there will be consequences. And that's the right thing to do. Don't punish all of us because you think some of us are not honest. Design your system to find out those who are doing the wrong thing and let them face the consequences so that there will be reward for doing the right thing and there will be deterrent for doing the wrong thing. Of course, if we don't generate revenue to run government will print money to spend. And when they print money to spend, all of us will suffer the consequences because inflation will come. The money in your wallet, in your bank account will decline in value. This is the worst form of taxation. It's a disorganized way of taxation when government prints money to spend. When the past government printed over 20 trillion naira to spend with interest of around 7 trillion, not billion naira. Altogether, about 30 trillion was printed. Part of the problem is what we are dealing with today with high inflation. When you print money, you don't need to go and look for a prophet it's not rocket science. You print money, inflation will come. When inflation comes, we lose value of the money we have. And that is the worst form of taxation because it's regressive. So it's in our enlightened self-interest to design a system where taxes are collected from people who have the ability to pay, and we follow the money to ensure that it is used for the purpose of society, and then everything works well. Some of the happiest people on earth, based on the happiness index survey, and countries with the lowest risk and crime in the world are the Nordic countries. Denmark, Norway, Sweden, these guys pay ridiculous amounts of tax, like personal income tax of 60% or more. And yet, they're the happiest people. And then they have the lowest crime, not because paying a lot of tax is a good thing. It is because those taxes, when they pay them, those taxes are used for the people such that the poorest person in those countries can meet their basic needs. You know, when I was still at PwC as a partner, I went to Denmark for an event. I usually read a lot about the place if I'm visiting them. So I spoke to one of my partner colleague there. And I said, you guys at the time they were paying 66.7, like 2/3 of their money was going to tax, you know, 66.7% was their tax rate. So I said, how are you people paying this tax and you're not even protesting? And the man smiled and said that, you know, he has no reason to protest, that in fact, he sometimes feel like he should add more. So I said, now this one, you're now making it very unreal. How would you want to add more to 67.5% as your tax? Then he told me a story that while they were growing up, there were three boys, young boys. I think they were like 4, 6, and something like that. And then they lost their dad. So their mom, you know, in Europe, you don't have a lot of people showing up without calling you to come and carry baby. So they were on their own. So the mom had no choice but to become a full, you know, housewife, just to take care of three boys that are restless. So what that meant was there was no source of income anymore, and they had to cater for the family. Guess what? The country gave them accommodation. They gave them money on a monthly basis to feed the family. They went to the best schools. So the best schools in Denmark are public universities. They went to the best schools. They got the best education when they were not working. So the guy got the job and then became a partner in PwC and said to me that if his country had not taken care of him, would he even be earning the money to be able to pay 67%? So he sees that they are collecting that money from him and taking care of everybody else. So he feels like, why should I not pay it? So when you have sustainable revenue and there's proper accountability, society will grow. By the way, there's no country where anything is free. When they say it's free education, free healthcare, no. Some other guys are paying for it, right? So we have to design our system to work in a similar way. So the reform are designed to achieve equity, competitiveness, and simplicity. From VAT reform, so from next year, many people on this call who operate in the service sector will, for the first time, be able to claim input credits on their assets, input credits on services that they pay for, including softwares, for example. And you need to understand this and design your system to report it correctly. Before, if you bought an item, even for accounting purposes, if you bought an item that is 1 million and there's VAT of 75,000 naira, the whole 1 million plus 75,000 naira is treated as an expense. From January next year, it's only 1 million that is your expense. That 75,000 is a receivable. And the way it's even treated for accounting purposes is different. So your accounting system must capture it correctly. Your record must support that you pay the tax. And then you must know how to claim the credit from government, whether you want to use it for other tax, or whether you want to use it for a refund, or whether you have an output VAT and you want to set them off against each other. You need to be aware of that. From January next year, many products, goods, and services, the prices are expected to come down. Sadly, because of the level of misinformation in Nigeria, people are now saying that prices will go up, like the opposite of what is expected. I have a friend, you know, who works with NESG. He told me over the weekend that he went to his tailor. He wanted to make a dress, and then the tailor gave him a high price. He now said, are you giving me this high price because it's December? So you know you have so many customers, you don't have time for me. Okay, well, since my own cloth is not like urgent, I will wait until January so that we can then, you know, you give me a better price. And the man said, if you wait, it will even go up in January. And the man said, why now? Should be there will be no Christmas anymore. He said, you know, the reform of the tax is going to increase the amount they will charge from January. So the man then asked him, which part of the tax law is going to make you increase the price? Of course, he doesn't know which parts. But if you keep saying something and you're repeating it, people will start to believe it. If you keep saying this tax law is going to kill all of us from January next year, life will be harder, people will start believing it, and then they will behave like that. They will just naturally increase their prices. That's self-inflicted pain. When what this reform has actually done is to reduce the cost of business so that from January next year, prices should come down. That's why it's important for us to understand these things, not out of sentiments, not out of emotion, but based on facts, so that we can drive the right behavior and then all of us can benefit. So we have personal income tax reform. I've explained it. We have the corporate income tax reform where small businesses will pay 0%. And for large businesses, the rate will be reduced. For example, there are people on this call who are familiar with what we call CAFA, Certificate of Acceptance for Fixed Assets. You buy an asset, you need to beg government to come and certify that you bought it for the amount that you bought it, and then they make you pay money for transport for them to come, accommodation, sometimes unnecessary headache. So that CAFA requirement has now been removed. Capital gains tax. There are issues to do with arbitrage for capital gains tax. You're doing business, you try and make it look like it's capital gains because you want to pay 10% instead of 30%. And there's a lot of distortion that tax is creating. So like many countries in the world, they have integrated their capital gains tax into their income tax system. So Nigeria too has done that now. But as we're doing that, we also are providing more opportunity for people to claim deductions for their capital gains that they didn't have the opportunity to do before. So that overall, many people that used to pay capital gains tax at 10% before will not even pay capital gains tax at all because their income tax profile is 0%. Like if you're a small company, turnover not more than 100 million, and you earn capital gains tax, your capital gains tax is also 0%. But of course, if you're a large business or a high net worth individual and you earn capital gains, you take all your deductions and then you pay tax at your rate, which can be either 20%, 15%, 25%, or whatever it might be. The reforms are designed to curb tax evasion. Tax evasion is dangerous to the economy and to competitiveness. If two of us work in the same sector, doing the same business, and you are the honest person and you pay your taxes because you're honest and you're patriotic, and you think it's your civic duty, and you're doing the right thing as a citizen, and the tax you are paying is, let's say, 20%. And me, I don't care. I say, what's government doing for me? And and then I don't pay. So I have 20% more resources than you that I can use to outcompete you. I can underprice you. If I don't like your face, I can price you out of the market. Okay, so this is something we cannot afford. Therefore, we have to design the system so that everybody who needs to pay is paying. Everybody that does not need to pay is exempted. And if you make that work, then society operates efficiently. Not only evasion do we need to address, we also need to address avoidance. When avoidance becomes too aggressive, it becomes unfair. And usually, businesses and taxpayers that have more resources are the ones that are able to do planning and pay next to nothing because they have the network, they have the contacts, they have the money to hire lawyers and accountants and tax experts. They can do international arrangements. Many of us have not even traveled abroad before, let alone setting up an entity in Bermuda and having director seats in somewhere in Germany or somewhere. So if you allow avoidance to work without moderation, then the powerful people who are well-resourced will gain even more advantage because they will turn their own tax to almost zero. It doesn't matter what you write in the tax law. Whereas the ordinary person will struggle to compete. So these tax laws have also been designed to moderate avoidance. Part of what will happen from next year is that businesses will now have to self-report the incentives that they have enjoyed and disclose their tax planning strategy. Then we have the tax ombud. Before now, taxpayers were left on their own to struggle and defend themselves where they can. But that is a very hard thing to do, especially if you're a business that's just trying to survive. You have no knowledge, you have no resources to fight. So when they come to you and say you're owing 5 million naira tax, 2 million naira tax, you either just beg or they ask you to pay a bribe, and that's not palatable. So under this new tax reform law from next year, there will be the Office of the Tax Ombudsman that is there as an impartial arbiter to protect taxpayers' rights and to defend, including the ombudsman can actually take your case to court. And everything that the ombudsman does is free of charge. It's written in the law. They can't charge you 1 naira for it, right? So you now have a remedy that is affordable, remedy that is friendly to you, and the one that you can hold to account based on the provisions of the law. There's also the one on tax agents. We have seen instances of tax consultants who themselves are not even tax compliant. Let me say here that there's so many tax consultants that are doing their best to help the system. They're technically competent, they're honest, they're supporting their clients, they're supporting the system, and we are grateful to those people. But we don't have enough of them. We have too many tax consultants who are selling tax evasion for a living. They help their clients to understate numbers, they lie and forge documents. As of this morning, I was still discussing with a lawyer who told me that the consultant was giving false information to the tax authority, not even to the knowledge of the client. It was their own way of bringing the tax liability down to get their fees paid. Until, I think they changed the leadership of the company and the issue became an engagement, and it turns out that the numbers were understated. Now they asked the company to pay a liability of around 1 billion naira. Now they're running up and down. The question is, but that person can't blame the government, right? They can only blame the agent that they appointed. Somebody is submitting your returns on your behalf, but they did the wrong thing. Now they've created liability for you. What recourse do you even have? You want to go to court and spend 10 years to find out whether they were wrong or not? So we thought that we need to make the system work for everyone. And part of that is a lot of provision in the new tax law to check the tax officers from the corrupt tendency that some of them have. Again, many of them, they do their job professionally, but there's also a good number of them that are corrupt. And they also find a lot of willing taxpayers who are equally corrupt, who would rather do anything but pay their taxes. They will under disclose, they will forge financial statements. And in between the officers that are corrupt and the willing taxpayers is also the facilitator in between, sometimes who is the tax agent. So this new system says, let us put control on everybody. You will no longer be able to act as a tax consultant unless you can demonstrate competence. As I speak to you now, I will qualify as a tax expert in Nigeria. Yet, the only return I can file now is my personal tax returns. I can't file returns for a company. The last time I did it, maybe it was 20-something years ago. So the fact that I'm professionally qualified does not mean I can, if I go to a client now, I go to a company and say, you know what, I can help you file your returns. They're likely to believe me. And then they give me the job and I'll mess up their returns and then they face exposure. So how is it that we have not designed a system to control that? So that when people hold themselves out to say, I can help you file your returns, I can represent you in dispute resolution, I can do X, Y, Z. There's a system that is validating that indeed they have the competence before they put another person at risk. So the conditions will be technical competence, self-compliance, because if you are not compliant, you have not filed your personal returns, you are not paying your own PAYE, you are not paying your own VAT, maybe you can't even help me. You have no moral right, even if you have the technical skill. And then there must be commitment to ethics. You don't intentionally misstate information for whatever reasons. Then we have the withholding tax regime that has taken effect already, essentially reducing withholding tax rate for many businesses and eliminating it for a few more. And then we have the economic development incentive. So this one is replacing pioneer status. For those who are familiar with pioneer status. So when you say pioneer status and you see a hotel is getting it, then the next day you find the mob is getting it, then the day after, you find that some random companies, are getting pioneer status. In fact, there was a time that oil companies got pioneer status. So this is not only confusing, it is wasteful way of, spending government money. We call it tax expenditure. So we are getting rid of pioneer status. If anybody already has pioneer status, they'll be allowed to run the life of that pioneer status. But nobody will get new pioneer status approval once this law take effect from January next year. What we now have is what we call economic development incentive. And this incentive is available to priority sectors. So agric is a priority sector. It's not pioneer. We've been doing agric since we were born, right? But it's a priority sector. So there's nothing wrong for government to identify sectors that are of priority to them and give them extra incentives. So you see here, the subsectors are listed. There's no doubt about whether you're eligible or not. How much is your minimum investment is listed. And what is the sunset? So we don't say the incentive is useful today. And then we wake up in 40 years to say, this incentive does not make sense. Why is it still in our law? Like we used to have reconstruction investments in our old tax laws until a few years ago. And they were incentive introduced after the Civil War. Many of us on this call were not even born at that time. The Civil War ended. Nobody remembered to amend the law. We left it there for so long. So we don't want that to happen to us anymore. Where we have major incentives, we introduce sunsets. Because what that means, if we did nothing, the incentive would expire. If the country believes that incentive must be sustained, then they will actively amend the law to sustain it beyond the sunset period. So what else should you know? So there's quite a lot. There have been a lot of conversations going on around these tax reform laws, which is good. But you find many of the conversations are centered on the same few issues that everybody is talking about. But really, for those of us who are going to be impacted, that have benefits and opportunities to take advantages of, and those of us that have compliance obligation, you need to go beyond those headlines that everybody is talking about. So what I've done is to try and make a list of some of them, including if you are investing in the capital markets, what you do know. I was coming to Abuja from Lagos weekend before last. As we landed, a gentleman walked quickly to me and said, sir, I see you on TV, you're the one doing tax reform. And then he said, but why are you creating problems for us? So I smiled and I said, which problem did we create? So is this something I can help with? He then told me that he's a shareholder with Sterling Bank. And Sterling Bank was doing right issue. For those who are familiar with right issue is when the company gives shares to existing shareholders to buy at a discount. So if you buy, you're good. If you don't buy, you lose money. So he said, he couldn't buy the shares of Sterling Bank. I said, what happened? He said, because we have introduced 30% tax now. So I said, can you quickly call your broker to buy for you? He said it has closed. How much do you plan to buy? Like 10 million naira. I said, see, you have 150 million naira exemption. I said nobody told him. Okay, so they told you that you have 30% to pay. You didn't ask more questions. You didn't find out the section of the law. So you lost real opportunity because of misinformation, from someone that either did it on purpose or also did it out of ignorance. Bonus shares withholding tax has now been eliminated. We have exemption now for state government bond. Lagos State issued a bond, recently. We have faster rules now for getting refunds. Before, tax refunds in Nigeria is rocket science. You can't get it. Sometimes 10 years you're trying to get a refund, no luck. And that's because when you pay taxes, the money is shared 100%, nothing is left behind. Under this new tax law, it says both at the federal and state level, before they start sharing money on a monthly basis, they must ask the taxman, how much refund do you need to pay people? You set that money aside because it's not really government revenue. It's a liability. It's somebody else's money. So you can pay refund to taxpayers. So free trade zone is being rationalized. Stamp duty on transfer of shares is being removed. And the tax appeal tribunal now has expanded jurisdiction. So they can now cover all taxes, including the ones within the jurisdiction of states. And the amount they can ask you to pay as a deposit is now lower than before. And then you have input credit that you can claim. We have zero rated now. We have zero rated on food. We have it on education. We have it on health. What that means is if you know someone or you are the person running a school, for example, or you have an agric business, or you are into medical line, from next year, January, you can now claim input VAT for any VAT you pay on assets, whether it's laptop, whether it's mobile phone, whether it's airtime, whether it's a plant and equipment item, to services, whether it's software, whether you pay for audit, whether you pay for consultancy, and there's VAT. You get your VAT back from government. In fact, VAT is the one that we gave priority to in the new tax law. Your refund must be paid within 30 days, even without an audit, right? So you file a claim for VAT refund, you get credited within 30 days. But if you go and make a false claim, your penalty is 200% of the amount. So again, remember I told you before, our system say a lot of people are dishonest. Let's just decide the system to punish everyone. The new system says no. Let's trust them that they will do the right thing and then punish those who don't. So before you claim input credit, make sure that you're not forging the receipt. Make sure that you're not stating 10 million as 50 million. Get your numbers right. If you don't have the competence, get someone to help you. Because if you make mistakes and make false claims, there will be huge consequences to pay. We don't want people like that to drag the system down. We must move forward as a people. Reduction of CIT rates, harmonization of tax. I told you about constitutional amendment. I told you about ombud. We've eliminated minimum tax on capital. The rule for deducting interest now is more friendly. You know, there's no harm. It's not a crime to borrow money to run your business. If it's a related party, we know the concern around transfer pricing. There's a structure for dealing with that. Why punish everybody because you think some of them are dishonest with the interest that they charge for tax purposes? That problem has now been fixed. There's mandatory electronic invoicing for fiscalization and real-time reporting. And many of you already may have been contacted by the FRS. If your turnover is 5 million or more, you must already be, doing e-invoicing. That threshold will still come down at some point to cover more people. The advantage with this is that it helps you even with your own reporting. It helps you with how you run your business, but it also gives data and intelligence to the government to know who should be exempted because they don't have the capacity, to know who should pay, and to fish out those who are evading taxes. Because we said before that if you are paying and I'm evading mine, we create a distortion for the economy and society cannot work well. Small businesses have exemption threshold even for VAT as well as withholding tax, but in some cases, they may want to opt out. If you want to opt out, there's a provision in the law for you to opt out and say, I don't want the VAT exemption, just leave me alone because when I charge VAT, the person I'm selling to can claim it. And that's what they want. So, and we also have the new VAT attribution rule that will reflect a fairer way of rewarding states for the activities taking place within their state in terms of consumption. We wanted a higher percentage, and many of you remember that it became very politically controversial. So at the end of the day, the governors advised us on what I'll call a compromise, but it's still progress from where we used to be. So and so on and so forth. So let me quickly see how I can conclude. So how will these new tax laws benefit Nigerians? Whether it's a business, small or big, whether it's local or multinational, whether it's a household or individual, and even government, everybody will benefit. There's not a single group of people that will be disadvantaged by this law. You may find some stakeholders where there are 10 amendments and 8 of them are to your direct benefit, and 2 of them means you need to pay a little bit more, right? If you keep quiet about the 8 you like and you start complaining about the 2, you create negativity for the reform, because what you need to do is to take all the 10 together and say, overall, I'm better off. Therefore, this is a good reform. You cannot reform a system where everybody wants to hold on to everything that benefits them 100%. They wish that other people can make the sacrifices, but not them. But that's not a reform. So the implementation for these reforms are in phases, and the phases are running concurrently. There's the foundation phase of ensuring that the legal instrument is published, that the regulations are prepared, and they are gazetted. That is ongoing. We also have, excuse me, the capacity and system phase, where, including what we are doing now, where you're trying to create awareness, you're getting stakeholders to understand their roles, government also to understand their role, and all, participants in that ecosystem, including, do we need to do operational manuals to guide ourselves? Because we're all learning. It's new for all of us. Technology upgrade, and then there's implementation and monitoring, where we're saying this job is not done. There is no country that gets better because they wrote fantastic tax laws. You only feel the impact when you implement. And that implementation is that last mile, but is the most important. So that process as well is ongoing. So, but we expect there will be challenges. There will be potential risks, but we also have our mitigation strategy. And some of the challenges include, public distrust. People just don't trust the government. It makes the job a lot harder. In many countries, you probably put in half of the effort we are putting into this reform, and you probably will be seeing better result by now. But in Nigeria, you say good morning, especially if you are working with the government, somebody goes out to see whether it is money, whether, it's still dark or not, because there's low level of trust. And trust cannot be enacted into law. It has to be earned. And this is why some of us have said we'll be committed to telling people the truth, even when it is the hard thing they don't want to hear. Because if you are honest with what you do and you are consistent with your actions, you build trust over time. And trust is the biggest foundation to build a successful society. So there is loads of misinformation out there. Some of them are done out of ignorance. Some of them are done intentionally. Some of them are sponsored. We know all of this, but we're not distracted. We just want to focus on our job of trying to help our country as much as we can. We saw some of the content creators were spreading the misinformation, and we believe that many of them will do the right thing. They have the right knowledge. So we then said to them, like we have been having engagement with anybody, like we're having today with NECA, we've had with civil society, we've had with journalists, we had with editors, we had with international investors, we're having with everybody. We say, content creator, okay, let's come and explain this thing to you so that you can understand it for even your own sake. And then if you want to educate your followers, don't mislead them so you have the right information. Before we knew it, they've turned that one to something else. Oh, they want to bribe us. If they want us to do for them, why can't they do X, Y, Z? I say, I don't even understand. Somebody says, come so that we can explain a new reform to you. Why don't you even just go and listen to the reform first? Why are you jumping to conclusion that, and then some people say, some sectors, some regions are not represented. This is not in line with federal character. I say, which one is federal character? We ask people to nominate the content creator that has been trying to explain this thing to them, or someone they would like to explain it to them. And then we got more than, I think 8,900 people nominated, more than 200 content creators. We just chose the top 20 because our plan was to have a small meeting where it can be very interactive. They can ask their questions and all of that. that was the process we went through. So when we saw more interest, I said to myself, actually, if more people want to learn, why don't we open it up? So we opened it up. You know, why some people wanted to learn about it, a few people wanted to be popular. So they went on social media. I said, we have declined these invitations. I said, God have mercy. Anyway, you can't do anything about those things. So when we opened it up and we said we want to increase it from 20 to 50, we got nearly 2,000 applications. In fact, there's a guy, I so like the guy's approach. So he did his I didn't even know the guy until this happened. On Instagram alone, he had 4 million followers. And it's even from the north. I was surprised. You know, it has more than almost some of the other guys from the south combined who are saying they won't come, you know, they this thing and that. This guy was saying that the list that you publish, I respect people that are there. I follow some of them. They're entitled to it. But someone like me too, I want to learn. And he shared his video. So I was so impressed. Like, I like this approach. I want to learn, you know. So we're going to be, you know, educating them in the next few days. And hopefully, we're not asking them to promote the reform. Every stakeholder we have met with, we have not said to anyone, go and be promoting the reform. It's not their business to promote it. And we're not going to pay anyone to write or to do videos. We want people to be convinced that this is something that is good for our country and they want to make their own contribution. There's a fairly elderly person that came to me and said, this reform is just so much negativity, but I want to understand it. So he sat down with me in the office. He's a very prominent person. So we spent nearly 30 minutes. He said to me that people don't understand it, so that what he would do, he brought a media crew to interview me and spent his money to translate it to Yoruba and Igbo and Hausa and Pidgin English. And he had 37 TV stations across Nigeria and some radio stations. He was going to spend more than 15 million naira of his money just to promote it. Of course, not everybody has 15 million naira. But it tells you that most people who are open-minded, once they understand this reform, the least you can do is, as a patriotic Nigerian who wants the best for your country, you can just explain this to another person on your own. We're not going to be paying you to do that. You know, so for all these risks that we see, we also have our mitigation strategy, which is to keep explaining, to keep being honest, to being consistent, fight the misinformation. And we're not attacking anyone, we're not abusing anyone. That's why, for those who know me personally, I'll remain calm because it's not personal. You know, if you disagree with the reform, it could be because you don't understand it. So maybe my job is to explain it better. If I explain it and you understand it and you still disagree, then it's no longer my problem, it's yours. Why should I get angry either way? So pay attention to that because there's a danger of a single story, like the proverbial blind men and the elephants. Not knowing the object in front of them, they move closer to try and feel it. And depending on the part of the elephant that they touch, they concluded what it could be. From thinking it was a rope or a tree or a wall or a fan or a spear or even a snake. None of them got it right because none of them felt the whole picture. This is exactly the case with these tax reform laws. If you take one item per time and you run with it, you jump to the wrong conclusion, you make the wrong decision, and you have the wrong impact. If you try and look at it holistically, your chances of doing the right thing is much better. For example, people say Nigeria is they're going to tax us to death. If you look at the major taxes and you just even compare, right? Because you can operate in isolation with even some African countries. You see Nigeria has either the lowest rate or the joint lowest rate with similar countries. Excuse me. And then this one is about capital gains tax. So you see, there was this Black Tuesday, 11th November 2025, just last month. The market lost 4.6 trillion naira in one day. And they said it was capital gain tax. But you know what? It wasn't capital gain tax until they said it was. The market had gained about 45% year to date as at that time. Then there's still market that gains every day. There will be correction, there will be profit taking, there will be softening. It happens in all the capital market. If there's a market that gains every day, all the people in that country will be rich now. So as soon as the market lost any amount, they said it's a capital gains tax. No evidence, so they just have to say it. They repeated it for the whole week. By the end of the week, it was 10 p.m. news on channels. It was on primetime news on Arise. Some people were running X-Pays with bloodbaths in the capital market, capital gains tax. Zero evidence. They had said it so much, and repeatedly, people began to believe it. By the weekend, some stockbrokers were calling their investors, aren't you going to sell? Everybody is selling. By Tuesday, people rushed to the market to go and sell. And the market lost 4.6 trillion naira in one day. It's the largest loss in 15 years. But what did the data show us? We collected the data for that day. It turns out there were 20,173 deals in the capital markets, worth 23.5 billion naira, which means the average size of a deal was 1.1 million naira. In a reform where 150 million is exempted, why are people with 1 million naira rushing to go and sell? You see, the misinformation has led to people losing real money. This 4.6 trillion was real money for many of them. Because once you sold, you crystallize the loss. If you still hold on to it, the market bounced back after we made some clarification and all of that. But the point here is, it can't work with misinformation. So if you even look at the numbers, it doesn't even make sense. The entire capital gains tax that FRS collected last year was 52 billion. So the amount that the market lost in one day is 4.6 trillion. Who loses 4.6 trillion because they are trying to avoid 52 billion? That is not even just 52 billion is not just shares, or it's everything. No? The capital market portion of this, maybe it's not even up to 10 billion naira. So it doesn't make sense. My view is that if you misinform out of ignorance, you are being negligent. Don't speak authoritatively when you're not sure. If you inform wrongly out of intentionality, then that is economic sabotage, which means intentionally you are stealing from the people because you are taking their wealth away and creating problems for them. Another misinformation is personal income tax. Because there's a reason why tax people are specialists, right? You can't just take the tax table and start interpreting it. Oh, it's 800,000 naira is zero. If you earn minimum wage, that means you pay tax. These people are going to tax minimum wage earners because 70,000 times 12 is 840. That is not how to interpret it. When you say taxable income of 800,000 naira is 0% tax, the amount they pay you when you work is not called taxable income. It's called your gross income or compensation. When you take your gross income, so the 70,000 naira minimum wage a month is your gross income. That's not what you put into the tax table. You take that amount and you deduct statutory deductions, NHF, pension, if you have insurance policy on your life and the life of your spouse, you have NHIS, National Health Insurance Scheme contribution, you deduct it. If you have interest for mortgage for your own house, you deduct it. When you finish deducting all of that, then you deduct your allowance for rent relief. When you finish deducting that, it is the balance that is called taxable income. The next or the first 800,000 of that is also 0%, right? In addition to that, you would also see there's a specific provision in the law that says national minimum wage earners are even exempted. So if they increase national minimum wage today to 200,000 naira, immediately that 200,000 naira is exempt from tax. All of that is in the tax law, but of course, the good news is not, it won't go viral. When somebody then says everybody will pay 20%, including the village person in the mama in the village, including the money they sent from abroad for them to pay school fees, they'll pay 20%. That one goes viral. And you don't need to provide the evidence. Just like the capital gains tax in the stock market, There was no need to provide evidence. You just needed to say it was capital gains tax, and everybody believed it. So this is something we need to work on as a people. Then the QR code you see to the right of this screen is a calculator we have developed because we know many people don't have the accounting knowledge or tax knowledge. They can't hire accountant, but they need to calculate their tax. You just go there, the calculator is there, put in your information, and it gives you the result immediately. It will tell you the tax you are paying under the current tax law, the one you pay under the new tax law, and it will tell you the difference, right? So the other one is there's a general perception that they'll say, oh, Tinubu and tax. And we had a session for journalists and we asked them, I said, tell me one tax that the president has imposed on the masses. And I offered to give them 100,000 naira. Nobody could come up with the answer. So contrary to the general belief that this president is imposing taxes on the masses, is actually the president that has reversed, repealed, or suspended the most taxes in Nigeria's history. The first 4 executive orders that the president signed on the 6th of July 2023 were actually suspending taxes. And you can Google them and go and look back and see those, reportage. So some of it is excise on airtime and data was reversed by this government. Cybersecurity levy was introduced by the previous government. It was suspended. Carbon tax on single-use plastic, all these nylon bags that we carry everywhere. They had introduced tax on it. The president suspended it. There was excise on imported vehicle. Import duties on food item, agri and pharmaceutical, 4% import levy was also introduced by an act in 2023 before this government. They also suspended it. There's Financial Reporting Council of Nigeria. There was a private company that they said they had to pay like 1 billion naira. So this government also addressed that and cap it at 25, million naira. There's also expatriate employment levy that was introduced and all of that. And this was approved in the previous government. And then it was finalized under this government. But once there was feedback, it was suspended. So in conclusion, you need to bear in mind that this evening before the implementation, this is more than just tax. And you have to make sure that you're ready, be able to do the impact assessment by first planning. If you haven't planned, it's already running late, but better late than never. Have your plan that is addressing everything. If you're a group of company, this reform will affect the group structure. If you're a subsidiary of a foreign company, it will affect the arrangement you have with almost everything. If you're a Nigerian company, it will have an impact. If you're a small business, there's nothing you do. There's nobody you are, including if you are even a government-owned entity. This reform would affect you. You must know the impacts. What impact would it have on the people? It's not that in January you just send people their net pay, credit their bank account, and they are confused. Because many of them will get more money in their bank account and they won't know why, right? A few people, your top executives, will get lower amounts in their bank account. The fact that they are top people does not mean that you shouldn't tell them. I used to get 5 million credits in my account before, for example, and it's going to become 4.8 million. Somebody needs to tell me I should not have to be fighting HR. Tell me there's a new tax law and this is a simulation and it will impact your salary. You get more salary or you get less salary, and by how much. And for companies where they don't want anybody to get less pay, even if that person is the CEO, then sit down and do adjustment of the salary from January, because your company will make more money under this reform. So if you give small part of it to that's your top executive so that they don't get lower tax, everybody wins. What impact will it have on processes, including the technology that we use as well? And then more importantly, don't just do a plan, implement it. That's where execution comes in. And you need this diligent implementation by force. You don't rush into implementation based on headline news and social media posts. You'll be implementing the wrong things. In a nutshell, the best way to predict the future is to create it. First, better understanding, including constructive engagement. Manage the transition well. There's a lot of benefit, but I can also tell you you have compliance requirements. From next year, every individual who is an adult and is tax paying must file returns. In Nigeria, we didn't used to file returns before. You said they've done my PAYE. Under this new law, that's not sufficient. Like they do in any country in the world, you must file your returns. Even if it's only PAYE salary that you earn, you still file the return. If you have other things, you have a house, you collect rent on it, you have a side hustle, put it there. It does not mean you will pay tax, but it means you have to disclose what you are doing. If you have a side hustle, even if you own a house, many people don't know this and you earn rent. Do you know that the cost of maintaining that house, if you pay insurance on it now, insurance is compulsory, and you pay agent, all the money you spend on that house, you deduct it from your rent before you pay tax on it. If you're on social media and you're a content creator and you get paid by Google and YouTube, YouTube is also Google, and Spotify and Facebook, the money you spend to promote your post, the money you spend to buy the clothes you wear so you can look good when you do your videos, the money you spend on the camera, all of that is expenses that you must deduct. And when you deduct it, you find that the net amount is on the amount you should pay tax. If it's lower than the threshold, you are exempted. If you register that side hustle as a business and you're not making up to 100 million naira a year, you also don't have to pay tax. Your CIT is 0%. You don't need to charge VAT. You don't need to do withholding tax. They don't need to deduct withholding tax on you. But if you don't have the knowledge, how can you take advantage of it? We'll finish this law now. It will take effect in January, and many people will still continue to suffer themselves with what they have been doing before that the law has taken away, just because they lack the knowledge. This is why they say knowledge pays the best interest. Investment in knowledge pays the best interest. So finally, position yourself. While people were saying capital market is crashing because of CGT that has zero evidence, and I said, if I'm a stockbroker, I will be on my way to making billions by now, because our young people in Nigeria, the size of our capital market is about $60 billion. And that's about the size of cryptocurrency and stable coins that our young people are investing in, that is even not making money now. And the money they are investing is like $200, $120. Nobody told them that if they come to the capital market has returned more than 100% in the last 2 years in dollar terms, and that they are exempted up to 150 million naira a year proceed, 10 million naira gain, exempted completely. If you go and tell any young person now, what do they tell you? They say CGT 30%, because nobody is telling them this story. If you tell them that the capital market is doing better than crypto, is doing better than gambling, where they're spending their money, and it's tax exempt, they will come. If you create a simple platform and an app where they can easily invest the same way they're doing crypto, they will make money. You also make money in the process. But you know what? They're saying capital gain tax will crash the markets, and that's what people hear. And what people hear drives sentiment. Sentiment drives behavior, and behavior creates our realities. So, if you want to find out more about this reform, there's a lot about it. The QR code to the left is where you can download all the new tax laws, and they have been uploaded in searchable PDF format, which means you can search. And today, if you search and you want to know something, AI will even summarize it for you. The AI can even tell you the section where it is. You don't even need to be an expert to start getting some basic knowledge. And then if you're able to engage with us, I encourage that you should do via our website, email, social media accounts, including even TikTok. So this way you can have more knowledge, make the right decision, and be able to optimize benefits under this new tax law. So thank you very much for the opportunity.
Thank you. Thank you very much, sir. Can we give Mr. Oyedele a round of applause? Thank you. Thank you, Mr. Oyedele. You've helped us to understand not only what is changing in the tax reforms, but also why the reforms matter, and how they aim to make the tax system work better for citizens, employees, and businesses. And I hope for the participants that I can say that without a shadow of doubt that you have gained better perspective with respect to the new tax reforms. And Mr. Idele made a statement. He gave a quote during his presentation. He said that you are not entitled to your opinion. You are entitled to your informed opinion. And I hope that as you have listened now, you're now informed and you have a better opinion on the tax reforms. Thank you very much again. Thank you very much once again, Mr. Idele. So now we'll proceed to the interactive section. Please, we are not going to be taking live questions because I see some people raising their hands. Please, if you have any question, please drop it in the chat box and we will do well to attend to it. And a number of persons have also been requesting for the slides. Please drop your name, the name of your organization, and your email address in the chat box. Then we can send the slides to you after now. So, Mr. Idolu, we are going to the interactive session, and I have one question in the chat box, and this is with respect to treasury bills. The person is asking if treasury bills are going to be attracting taxes, and if so, sorry, the person is asking if investments in treasury bills are going to be attracting taxes, and if so, if the tax is going to be either on the interest or both on the interest and the principal. And also, are T-bills investments placed in the same category of government bonds? So let me take that again. Are investments in treasury
No, I
bills?
got it. I got it. That's
Oh,
fine. I got it.
all right. Yes. So we can, or do you want me to ask off the question and then you note it down, or I ask the question?
Yes, yes. Let's take like 3 at a time.
Okay, and then there's a question about the rent relief with respect to tax, because we have a number of HR employees here, and they just want you to, buttress on the rent relief component.
Okay.
Yes, sir.
Is there a third one?
So the other one is also with respect to the rent relief, with respect to a married couple. How are they going to claim the rent relief if both of them are living in a house? And
Mm-hmm.
yes, sir.
All right. So on the first one around the treasury bills, OMO bills, corporate bond, corporate commercial papers, and all of that. So there was an exemption order in 2011 with a 10-year lifespan. It expired beginning of 2022. So from 1st of January 2022, interest on treasury bills, interest on commercial paper, corporate bond, all of them liable to withholding tax at 10%. The only exception is government bond. Now, treasury bills is not government bond. And if you're going to call it government bond at all, you can say short-term government bond, but it's more called bills because bonds are a category of government security that has longer term tenure. So, withholding tax on T-bills should have been deducted from that time. They were not being deducted. CFRS recently then issued a circular that says there's withholding tax to be deducted on treasury bills interest. People say, it must be this tax reform. So it's not a tax reform. It has always been there. People just didn't comply. So the withholding tax is applicable only on the interest. It is not applicable on the principal amount that you invested. So if you put 1 million into treasury bills and they pay you 1.2 million at the end, 200,000 is your interest, 10% on it is your withholding tax. And as an individual, that withholding tax is your final tax. You won't pay any other tax on that income. Rent relief, how does it work? So for rent relief, you can get maximum of 500,000 naira. So many people say, that's a small amount of money. We said yes, but it was not designed for big people. It was designed for low-income earners to help them further reduce their tax liabilities. So as an employee, if you paid rent, then you have to provide the evidence. You can't claim tax deduction by saying, trust me, I paid rent. You must find something, either the bank transfer or the receipt, and I know some landlord will not give you anything, but at least if you don't pay in cash, because I don't envisage you carry cash and go and pay your landlord. If you have any evidence, the guidelines will still be issued, and I'll tell you more about how to deal with this. But generally, the staff need to provide the evidence to claim the deduction. HR person that has the question will be working with their finance unit in the organization to find the best way to get this information without too much administrative burden. The second part to it is, why don't we just give this amount to everybody? Why do they need to provide evidence? Government is also trying to get intelligence about the landlord that is collecting the rent and not reporting it. So that is why the relief is not going to be given to you automatically without evidence. If you are married and you're staying in, of course, you have to stay together in a rented place, one of you can decide to claim it because your receipt will not be split into two.
Yeah.
So if you want to split it into two to claim allowance, you run into troubles finding the documentary evidence. So it's better for one of you to decide to claim it. It could be the wife, it could be the husband. And then, of course, if you want to share it between yourself, when you get the tax benefit, you can now share it, informally between yourself.
All right. Thank you. Thank you, sir. So, sir, the next set of question. As a retiree of the federal government, what tax am I expected to pay? Will I pay tax on my savings? Then the second one, sir, we already have payee, which is handled by the state. Is payee now going to be paid to FIRS?
All right. So as a
Okay.
retiree, whether you are in the public sector or the private sector, there's no tax on your pension, there's no tax on your retirement benefit, there's no tax on your voluntary contribution scheme. It's all tax-free. But if as a retiree, you are doing side hustle, or you just say, I'm retired, but I'm not tired. And we have people who are retired and they're still doing consulting and all of that. So if you start doing business, you will pay tax on that. We will not say that because you are retired, you shouldn't pay any tax. And the example that I made recently was that if we do that, one day Dangote will just say he has retired. I think he's now close to 60, and Dangote, all his companies will now be exempted. So we can't do that. So retirees on their retirement benefits, on their pension, if somebody lost their job and they are paid a severance payment, all of that, no tax. But if you do business and you make money, you pay tax like anyone else, whether you're a government retiree or private sector retiree. Then it's PAYE to be paid to FRS now? No. So PAYE continues to be payable to your state where you're resident, as well as if you are a high net worth individual doing direct assessment, you continue to do that to the state, not the FRS.
All right, sir. So, sir, there's a question here. Can you speak more on the free trade zone tax status under the new tax reform?
So for the free trade zone, what we had was a system where some companies were operating in the free trade zone, which was set up for the purpose of facilitating exports, but they began to produce and sell it to the domestic markets. So because they were not paying corporate tax, they were competing with companies in the domestic market, producing the same product and paying taxes. And those companies in the domestic market were finding it difficult to compete. It got so bad, many of those domestic companies had to find their way to lobby to be designated free zone inside the domestic market. It's either two ways. Either we just declare the whole of Nigeria a tax-free zone and print money to spend and face the consequences, or we do what every other country does. When you have a free zone, they are encouraged to export. If they sell to the domestic market, they should pay the tax that the domestic companies are paying. It's just being fair. It almost looks like just normal thing that we shouldn't have to explain harder like this. But of course, they've done it for so long, they've gotten used to it, and they don't want to pay the corporate tax. So what we have now done is to say between now and January 1st, 2028, if you sell up to 25% to the domestic market, you won't pay tax. So you have time to adjust yourself. From 2028, even if you sell 1% to the domestic market, you pay tax. If you keep exporting, no tax on your export. If you produce for consumption within the zone, no tax on it. The moment you sell to the domestic market, pay the tax that domestic companies are also paying. That's the only way to create a level playing field.
All right. Thank you, sir. Sir, we have a question here. Will the sole proprietor of a business that earn below 100 million naira file returns as well? And also, I am a contract staff whose contract is renewed every year, and the company pays withholding tax directly to the government on my behalf, which is not linked to my tax ID. What is the implication?
So if you are a sole proprietor and you operate at revenue or turnover below 100 million, your sole proprietor is most likely not registered as a company. So you are treated as an individual. So under this new law, you will not charge VAT. You are still exempted. No withholding tax on you. You are still exempted. But corporate income tax of 0% is not applicable to you because you are not a company. So your matter will be dealt with your state where you are resident. You take the money you made, let's say it's 10 million a year, take out all your expenses, including if you have an asset, if you have a car, you do the capital allowance on that car. You have a phone, do capital allowance on it, you buy airtime, deduct it, but you must keep record for all of this. Whatever balance is left, you take it to that calculator I showed you earlier on and calculate your personal income tax and go and pay it to your state. If the amount is small and your personal income tax is zero, still go and file your returns and put zero there. You have to file returns. And for the contract staff that says they deduct withholding tax, they're not supposed to be deducting withholding tax on you, unless it's PAYE that you're calling withholding tax. If you're a contract staff, you are still a staff. The law does not separate between contract staff and permanent staff. It talks about employment. If you are in employment, right, whether it's temporary employment or full-time employment, what they should do on you is PAYE, and they should register you or register yourself so that they pay your PAYE and it's showing in your record. So that even when you need tax clearance certificates, the information is there. So advise your company to do the right thing. This practice, I don't know where it started from, but it's very popular in Nigeria. They'll say contract star and they'll be doing withholding tax of 5%. If the person that is doing the work for you is an independent contractor, so for example, I can be an accountant that says, I don't want to work for any company permanently. I sit down in my house in front of my laptop and I reach out to small businesses. I can help you file your returns, prepare your financial statement, and then they will sign me up. Okay, we agree. How much are you going to pay me? You pay me 50K. That's when you can do withholding tax. When you hire me and I come to your office or I sit down and work for you only, I'm not a contractor. I'm an employee. It is not withholding tax. It is PAYE.
All right. Thank you, sir. And the next question. I have an ongoing tax investigation, and the tax officials have deliberately been frustrating the exercise, even with all the evidences provided. Can an ongoing investigation under the current regime be dragged to the ombud for redress? Then, in a situation where an employee maintains two residences during a financial year due to work-related relocation, is it allowed to claim rent relief for both properties or rent, or is the claim restricted to only one?
Okay, so if you have a tax investigation that is ongoing, once the tax ombud office has been properly set up, so it hasn't been properly set up now, by the time they are ready, you have information on free, toll-free call centers, email, all of those stuff. Yes, you can report. There's no time limit. You can report things that happen before the ombud, before the new law came into effect to the ombud, because it affects you as a taxpayer. For the person that said they have two residencies, you have a house in Lagos, you have another one in Abuja. Can you only claim on one or two? You can claim on, so long as it's your resident where you're paying rent, you can claim on both. But remember that you can't claim more than 500,000. So it depends on you. If one rent is already more than what you can claim, then it's easier to just claim on one and provide one receipt. But if one is not sufficient and you need to add up the second, rents that you pay to be able to claim maximum relief, of course, there's nothing in the law that says you can't claim more than one. But of course, if you have too many, if you have two houses, you have three houses, and there's no evidence to show that you live in both of them, somebody will be wondering, are you sure you're not, doing business with the other one, right? So I think that those are the things you need to take into account.
All right. On the input tax deduction, during transition, can the input tax for 2025, which were not deducted, can they still be deducted in 2026? Then,
No, they cannot be deducted.
all right.
So the input tax you can deduct will be the input tax on transaction from January next year. The input tax for this year, 2025, you treat it in line with the law of 2025. You can't apply the law of next year to input tax of this year.
I heard Mr. Oyedele say that if your revenue is less than 100 million naira a year, you are not liable to CITA, VAT, and WHT. But how do I explain to my supplier that I am not liable if they are charging from source? This is with respect to VAT and withholding tax, sir.
Yeah, this is one area where all of us have to do a lot of work, because you also have this system where individuals and some companies just decide that they want to implement their own version of the law. So the law has exempted you, but somebody can insist that they must deduct withholding tax. They can insist that they must charge VAT. Now, this is not something that government can do, except that you can call the ombudsman. But in most cases, you don't want to make it a fight. If somebody is your customer, they're giving you business. If you have disagreements with them, you can't be reporting them. Otherwise, that'll be the last time they give you a contract. So if this is something you want to solve amicably, what I recommend is first try and educate them. Get a copy of the law, find the relevant section, and show it to them. Most likely, if they understand it, they'll do the right thing. If they still don't do the right thing after you've shown them, then write to the tax authority and say, I'm company XYZ. This is my annual turnover based on this section of the law. I believe, or the law says, not even you believe, the law says I'm not that liable to this and that. Please confirm. So the taxman then confirm. Under this, our new tax law from next year, there's a requirement for the taxman to respond to your request when you ask for a ruling. And there's even a timeline within which they must respond. So when you get that response, you now give it to them. See, the tax authority says I should not pay. If they still insist to deduct, then something is wrong. It's no longer a tax matter. So try your best to resolve it in that way.
All right. In the NTAA, there's a section that states that any asset that might qualify for capital allowance, the asset must have VAT or excise duty inclusive. If such an asset or equipment is bought and no VAT inclusive, would the asset be qualified for capital allowance?
No, it will not qualify. So if an asset is liable to VAT, because there are some assets that are exempted from VAT. But if an asset is liable to VAT and you bought it and there's no VAT, you will not be allowed to claim capital allowance on that asset. So your choice is, number one, you can ask the person that sold to you to include VAT, or you can self-charge yourself the VAT. Otherwise, you lose. One of the things we're trying to do, I told you earlier on, is we're trying to fight evasion. We want to make it more expensive for those who are evading taxes. If you import an item and you don't pay duties or you're under declared duty, you also will not be able to get the deduction for it or capital allowances from next year.
All right. So there have been a couple of questions with respect to e-invoicing. So maybe you can speak to that in a few minutes, sir.
Yeah, so e-invoicing is a system, currently, if you issue an invoice, your invoice is a document. You can print it out, you can PDF. So that document becomes an object, or sometimes it's even like a picture. So when the taxman shows up, you bring out your files and give them the invoices and they start ticking stuff there. That is very old school method of dealing with tax matters. What electronic invoicing is now doing is to say, government wants to create a system where your invoicing will be linked to that of the government. So when you issue your invoice will be like a set of data. Every field, the name of the buyer, the amount you sell to them, what you sold to them, all that data is picked up as intelligence and is downloaded to the tax authorities system. It tells us who sold it and who bought it. This is one of the reasons why we said there's no need for CAFA, this thing that you need to ask government to validate your asset. Because with this new system, the buyer and the seller will report it, and the amount can be verified and validated with third-party data. So as you are issuing your invoice, a copy is being downloaded to FRS system. What that means is with that data, FRS can tell how much Nigeria paid for technical services, how much the whole of the country
Repeated.
used in buying laptop, right? All that information is available. It will also help the taxpayer because it means that at some point, there are countries where they'll say there's no need to file VAT returns anymore. So even Rwanda, a small country like Rwanda, they said people should not file VAT returns because they are getting all the data already. So once we get to a point in Nigeria where we also have that reliability of fiscalization, you won't need to file VAT returns. And the fight about, hey, which state is getting derivation and consumption will no longer be an issue. All that data helps the system. So because you can't ask everybody to implement on day one, the FRS started with companies with turnover of 5 billion a year or more. Those are the big taxpayers, and they are piloting with them. So it's either you connect to some softwares, there are people that the FRS have accredited, and then they link you up, right? So, and if you want to get more information about it, you can find out from the FRS website. I also know that they've done a lot of engagement with the private sector. I'm not involved in implementing it. I'm only just explaining the principles to you. So this is the principle of fiscalization of electronic invoices.
All right, thank you, sir. At a time, we had harmonized tax structure put together by JTB. Yet states and legal and local governments still go ahead to create levies. Imagine companies being made to pay for parking inside its premises. How do we hope to eliminate the tradition of fraud in the tax system, especially through tax officials and consultants? Also, I need more enlightenment on direct and indirect taxation.
Okay, so unfortunately, this is not a forum where I can explain direct and indirect taxation because that's a basic principle in tax that you can find if you just Google it online, right? If you pay taxes on your income directly, it's a direct tax. If you pay on consumption like VAT, it's indirect tax. But I think the real question you ask is about there's harmonized tax, but then local governments, state, they're still collecting their taxes. Some people are asked to pay for parking inside their home premises. The first time I heard this was actually very recent. I was surprised because I used to think that it was the setback because the setback is not your land. It belongs to the government. If you park there, in many countries, they charge you for it. And that's because they're also supposed to maintain all of that area, provide security, and you can question whether they are doing that. But they even said that inside your own premises, they charge you for it. The way, like I said before, the way we're trying to address this is going into the constitution to amend it. In the meantime, we have developed a model law we call harmonized taxes and levies that we want every state to enact into law because they already said that the national one was unconstitutional, that you cannot enact a law at the center and ask everybody what taxes they can collect. So in the new tax reform laws, the existing Taxes and Levies Act, the national one, has been repealed. We've now developed one for the states to enact, and we even just had a meeting yesterday with some of the states, and they confirmed that they are making progress with these new laws. So this is our temporary solution, pending when the constitution is amended, that will provide a permanent solution so that we agree on a few taxes that should be collected, they are harmonized, and nothing else is collected after that.
All right, thank you, sir. Where a company reported in its audited account a loss, but its income tax computation results to tax liability, how will it know if the tax liability is up to 15% ETR since the company reported loss?
There's a formula in the tax law for calculating effective tax rates. So what you need to do is go and look for that section in the law and you can even do the calculation yourself. It's a very simple and straightforward calculation, but it's not based on the loss of profit in your accounting profit that you just speak directly. You need to make some few adjustments to them. So there's what we call covered taxes. So your covered taxes is your numerator. And then there's what we call net income, which is your profit before interest and tax, I believe it is your denominator to calculate that amount. So in a nutshell, without sounding too technical or doing maths on this call, I'll recommend that you get a copy of the law, search for effective tax rate or top up, and then you see the calculation stated in the law.
All right. I noticed that firms providing professional services are exempt from the definition of a small company according to the NCTA. I would like to know the reason behind this exemption. There's also been a couple of questions with respect to the definition of small companies, sir.
Yes, so professional firms, or I should say, professional um, services like the services of lawyers, accountants, tax practitioners, they are not allowed to be small companies, even if their turnover is less than 100 million a year, for two reasons. Number one, these set of taxpayers are knowledgeable and they are competent. They can keep records. Number two, this set of taxpayers work within a system that they facilitate whether people comply or not. Just imagine if you have, 100,000, or maybe not up to that. Let's say you have just even 1,000 tax consultants who are small businesses and they are not charging VAT. How would they help their own clients? And if they charge their services to their clients, it means that their clients can't claim, they themselves can't claim input VAT because it means they are exempt. And therefore, the cost of their services to their clients is higher than it needs to be. Actually, if you have the capacity to account for VAT, you are better off not taking the exemption than taking it. Because any cost, as if I have a firm as an accountant or a lawyer or a tax practitioner from January next year, when I buy airtime, I'm claiming my input VAT back. I buy laptop, I'm claiming the input VAT back. I buy a phone, you know, I buy a software to do meetings with my client on Zoom. All those things, I'll claim the input VAT back. I'm charging the output to my client. It's not your cost, right? But because can claim your input VAT back, in fact, your fees is more affordable to your customer. So this is the reason why, if you look at tax laws where they have exemption threshold for VAT, they also have a provision for opting out. Because any small business that knows how to do the accounting and keep record is actually better off for them to opt out of the exemption. So we believe that professionals can do it. And by law, under this new reform, they are not eligible to claim small company exemption for that purpose.
All right. Thank you. Thank you, sir. We have a couple of questions, but won't be able to take all of them. So we have created a designated email address where these questions can be sent to. So we are going to collate and send to Mr. Oyedele. The email address is taxreformshelpdesk@neca.org.ng. It's currently on the screen. For the questions that we are unable to take, please send your questions to this email address that is up on the screen. Then, Mr. Oyedele, just a recommendation that I saw in the chat. Beautiful presentation. My brother is, we've heard about the taxes we should pay. What has the government articulated as the benefits to the citizens? We should have achievable milestones to be presented alongside this. For instance, in the first year, we would activate so for citizens. By year 5, we will achieve this with taxes collected. If this is not highlighted, the citizenry are not likely to trust the process. So that's a recommendation that I wanted to.
That's a very valid point, and it's a very popular view,
Yes.
an issue that people raise from time to time. And I say it's a valid issue, but there are 2 points to that. So on one hand, let's even say that government does not want to be accountable, and the government is collecting 1,000 naira from me now, and the law says from next year that 1,000 will become 200. Why should I fight the 200, right? So whether they're going to be accountable or not, I'm still better off if the reform is reducing my taxes, is harmonizing the number of taxes I pay, right? That's the first point, and that's the most important point. But then the second point is that even when they are collecting 1 naira or 1 million naira, government needs to be accountable for it. And it's something we all have to do together, right? So I was invited along with about 100 other Nigerians. We sacrificed our times. I took an early retirement at the peak of my career where I'm supposed to earn, the biggest amount of compensation in my career to do that, right? So if everybody says, if you can't tell us how they're going to spend the money, we'll not do the reforms. Of course, we just let the reform be and we continue with our chaotic way of doing things. So first is, this is progress. Then number two, let's work together and hold these our political leaders to account. And that is when we'll start seeing the results of the taxes that we pay, and then we build a better society for all of us.
All right. Thank you. Thank you so much for joining us today. Thank you for taking time to
Thank you.
answer the questions. Thank you very much, sir. As we bring
Thank
the
you.
session to a close, I invite the DG, Mr. Diwali Smatorinde, to give the closing remarks and also to give the call to action. DG, sir, you have the floor. Sorry, please, DG is joining shortly. Is joining shortly.
I don't know what I will call it. Is it a master class now? You have saved us a lot of stress, as it were, and we can but thank you for your time. Thank you for the support that you've consistently given. I'm here already. Can you hear me? Can you hear me?
Yes, DG, I can hear you.
Okay. Thank you, sir, for Tommy, am I audible?
Very audible, sir.
All right, sir. Thank you, sir, for your time. We are not taking it for granted. I understand how your schedule is, but in between all the packed schedule, you still find time to share with us. We really want to appreciate you and just to assure you that we'll continue to give our support. We'll continue to um, uh, advocate on this very important need for key stakeholders to align with the tax reforms, because on the long run is the benefit for all of us. Some of the misinformation that is going on, we'll also try and continue to create platforms where we'll continue to share the real information with key stakeholders. I don't know if our chairman Committee of Finance, Dr. Muiwa, is on the call. But once again, we just want to really thank you for your time. The email that was shared, I want us to reshare that email on the screen. So, peradventure, for all our colleagues on the call, please, if you have any information or have any question to ask concerning the tax reforms, or if there's a part of it that has not been cleared for you, please send your email to this email, and be rest assured that all the questions, all the clarification, will collate them all and send it to the appropriate quarters. And since the chairman has also given his permission, his go ahead, that we run and that we keep this FDEX open. So this will also serve as a form of feedback to the work of the committee. So please maximize the opportunity that this FDEX will provide to share your perspective, share your questions, share clarification, so that all of us together, we can be advocates of this tax reform and maximize the benefit, not only for ourselves as individuals, but for our organization also. So once again, thank you, Chairman. We really appreciate you. And thanks, colleagues, for pulling this through also. And for the over 500, at the point we had over 500 participants logged into this call. We want to thank all of you also for your time and look forward to a very successful implementation of the tax reforms from January 2026. Once again, thank you. Tomi, I hand over back to you.
All right, thank you. So for those that are non-NECA members, you might be wondering that what is NECA about? What does Mr. Boy, can I have the flyer, please? All right. NECA stands for Nigeria Employers Consultative Association, the voice of business since 1957, and we have one major goal: to protect, promote, and advance business interests in Nigeria. We are a business membership organization, and if you can see from the flyer, we have different fields where we play: advocacy, enterprise protection. During Mr. Oyedele's presentation, he made reference to the Financial Reporting Council of Nigeria due that was imposed on private interest entities, and now it has been capped to 25 million naira. NECA was at the forefront of that advocacy. We also have mediation and conciliation amongst member companies and their employees, capacity building. We have a learning and development team that, offer both in-house courses and or open courses to NECA member companies and also non-member companies alike. Collaboration and partnerships. We are affiliated with the International Labour Organization and the International Organization of Employers, and also some Nigerian-based agencies. Advisory services, representation. We represent our members at the National Assembly. We take cognizance of the bills that affect businesses and we speak about it, and also enterprise sustainability. Every business has a right to do business in Nigeria and to also not be taxed out of business. And you can see from the presentation that we've had today, we are also at the forefront of that. Then also networking through any of our programs. We have the Labor Adjudication and Arbitration Forum coming up February 2026. We have the Nigerian Employer Summit that holds June every year, where we bring together representatives of the private sector and the public sector to discuss about matters that are pertinent to businesses in Nigeria. Then we also have the Job and Employability Fair that holds May every year. We have the Medium and the MSME Fair that also holds every year. So why should you join NECA as a company? You have access to policy advocacy and representation, legal and industrial relations support, capacity building and training opportunities, exclusive business insights and networking platforms, exclusive local and international business linkages, business sustainability support, real-time advisory services and support. So you can scan the QR code if you're interested in becoming a NECA member. You can also check our website at www.neca.org.ng, and we look forward to welcoming you into the NECA family. Thank you. DG, do you want to add anything to all the things that I've said? All right. In the event of that, we can now end the session. Thank you very much for taking the time to join. Don't forget to send your questions for those questions that we could not take to the email address that we showed on the screen earlier. And yes, tax reforms helpdesk@neca.org.ng. Thank you very much for your time and have a fantastic day. Thank you.